Okay. So I'm just going to talk a little bit about Mixta Africa so that you understand our company, what our company does, what our company has done in the capacity that we are. Okay, so Mixta Africa was founded in April 2005, and we have projects present in 8 African countries. We're a foremost real estate company in the African real estate sector, and we're a subsidiary of Asset and Resource Management Company, that is ARM, and it is one of Nigeria's largest non-banking financial institutions with over 3.5 billion under management, and we have our headquarters situated here in Lagos, Nigeria. So Mixta Africa has projects across 8 African countries, which include Egypt, Tunisia, Algeria, Morocco, Mauritania, Senegal, Ivory Coast, and Nigeria. However, we are just operating in 5 of these countries, meaning we have, day-to-day operations in only 5 countries, Nigeria, Tunisia, Morocco, Cote d'Ivoire, and Senegal. So Mixta Africa has successfully completed 20,000 plus units. We have accumulated up to 20 years of experience in infrastructure and real estate. We have fully delivered 47 projects across the 8 African countries that I have mentioned. And we have a land bank of 15 million plus. So now, rent to own in Nigeria, understanding the basics and navigating mortgage. Rent to own is increasingly becoming popular in the Nigerian pathway to home ownership, and it offers individuals who may not have the immediate financial resources or means to buy a home outrightly, or for some reason you're unable to get or qualify for a traditional mortgage. The rent to own gives you the luxury and the flexibility with the structured payment plan to be able to become a homeowner. And some of the benefits include, pathway to home ownership, you build your equity, and the pricing is fixed. So the pathway to home ownership, of course, almost everybody here that has joined the call would like to be a homeowner or have investment in real estate. With the rent to own scheme, it affords you that flexibility, because unlike the normal structured payment plan of 12 to 18 months, the rent to own scheme affords you the flexibility of paying over a number of years. So the rent to own provides an opportunity for individuals with limited funds, like I said, or poor credit scores to work towards owning a home. And it is hassle free because it is, like I said, for a number of years. Then you build up your equity. So as you are a tenant hoping to own the home someday after the lease period may have elapsed, in that time you're building your equity to become the homeowner. So you're paying your equity contributions, you're paying your rent, and then at the end of the lease period, you hope to pay something called an option sum, and then eventually convert to full ownership. Tenants build the equity while renting, making it easier to transition into full home ownership. So that means that in the time where you're building up your equity, it's not as hectic as a standard payment plan where you're required to pay every month. You're required to pay a huge chunk of money. This one is a gradual process that builds your equity up until the point where you become the full owner. Then the fixed purchase price. So for the rent to own scheme with us at Mixta, you don't have to worry about us coming to you in a couple of months time or in a couple of years time to say that we are changing the price or whatnot. As you're coming into the scheme, everything is well detailed and spelled out for each client. So we have we've structured our rent to own scheme in such a way that at the end, at the point of entry, you already know how much you're going to pay over the course of the X Y amount of years that you'll be leasing. how much you'll be paying at the end of the lease year, so that you can properly plan towards building, that equity, like I said, towards, converting from rent to actually owning.
Sean, sorry for interrupting you. So I noticed a lot of people joined after we introduced Mixta. Can we go over the first slide again, if you don't mind? Because a lot of people just joined. Probably should wait like a minute for more people to join. Then we'll take the first slide again. Is that okay?
Yeah, all right.
Thank you. So I will go over the
Mixta Africa one more time.
Okay.
Okay. All right. So, okay, go ahead, Glory.
So before we proceed, there's a chat box. You can see a chat box. Please drop your questions, and someone will be on standby to answer your questions. Please, we'll wait like 1 minute for more people to join. Just 1 minute, please. Then Sean will take it from there. Thank you, everyone, for joining this evening.
Okay, thank you once again, Glory, and thank you to everyone that has just joined. So I'm just going to go over what we do at Mixta Africa and who we are one more time. So Mixta Africa is the foremost real estate developer in the African real estate sector. We were founded in April 2005, and we have presence in 8 African countries while having active operations in only 5. Mixta Africa is a subsidiary of the Asset and Resource Management Company, ARM, which is Nigeria's largest non-banking financial institution. With over 3.5 billion naira under management, and we have our headquarters situated here in Lagos, Nigeria. So the African countries that we have projects in are Egypt, Tunisia, Algeria, Morocco, Mauritania, Senegal, Ivory Coast, and Nigeria. However, we only have operations in 5 African countries. That is Nigeria being the headquarters, Tunisia, Morocco, Cote d'Ivoire, and Senegal. Mixta Africa has 20 years of accumulated experience in infrastructure and real estate. We have 20,000 plus housing units successfully completed, and we have fully delivered 47 projects across the 8 African countries that I mentioned, with a vast land bank of 15 million plus. So rent to own in Nigeria. Rent to own in Nigeria is increasingly becoming a very popular housing option for individuals that are finding it difficult to access a timely mortgage or do not qualify for the traditional mortgage, or individuals that do not have the immediate financial resources to, buy a house within a period of 6 months to 12 months or 18 months, which is the traditional, standard of payment when you're buying a house. The model combines renting. It's a combination of renting and buying that provides flexibility and structured plan for future home ownership. Some of the few benefits are: it's an easy pathway to home ownership. In this time, you can build your equity without it's hassle-free, and then there's a fixed purchase price. Now, for the easy way to pathway to home ownership, easy pathway to home ownership, pardon me. The rent-to-own scheme provides an opportunity for individuals with limited funds, like I rightfully said, or poor credit scores to, work towards owning a home. That means that it gives you the luxury of time, unlike the standard payment plan that you have 12 to 18 months to pay, such huge chunks of money and then become a homeowner. This one affords you the luxury of time, meaning that you have, a couple of years to pay out and eventually become a homeowner. You build your equity in this time where you are renting. So that means that every money that is paid towards this investment is eventually going to get you to the point where you become the owner of the apartment or the house that you're you're buying or you're investing in. Then there's a fixed purchase price. For Duo, our Mixer Africa's rent-to-own scheme, there's a fixed purchase price, and you don't have to worry. Like I said, the rent-to-own scheme affords you the luxury of time, meaning that you pay over the course of a couple of years. With Duo, the maximum amount of years is 3 years, right? So coming into the scheme, most of all our clients are aware that at the end of this third year or the second year or the first year, or no matter how many, the number of years that you decide to lease for, there's already a spelled out, purchase price that that you're saving towards, or you're trying to, get at the end of, your lease period. So at the end of any rental period that you decide to choose, that there's a fixed period of payment, and Mixer is not going to come and meet you, in a couple of months' time or a year's time and tell you that, look, the price has gone up, or so, funny things like that. You come into the scheme knowing how much you are going to pay at the end of your renting tenure. I think that as we go further in the presentation and as we get to the payment plan options, you understand better what I mean by that. Our product offerings, one of our product offerings called Marula Park Estate is what is currently available under our rent-to-own scheme called Duo by Mixer Africa. Marula Park consists of 1, 2, and 3 bedroom apartments, and is within, it's not far, it's in very close proximity to the prestigious Lakaway Lakes Golf and Country Estate. It is also very close to some of our neighboring estates that we developed, that people are already living in these estates, like Beechwood Park Estate, and also RDP. So it is in a very secure and gated community. Under the rent-to-own scheme, what we currently have available is a 2-bedroom fully finished apartment, and the entry price starts from 47 million naira. That means entering the scheme, the price as of today, as of now, is 47 million naira. Some of the facilities that you will enjoy in this estate, aside it being in a very secured and serene environment, is a gated estate. We have 24 hours power supply and solar home systems. There's a perimeter fence and gate. We have 24-hour security. Like I said, it's in a gated estate. We have beautiful landscapes and green areas. We have paved concrete roads. And so you're sure to know that when it rains, like now that we're in a rainy season, when it rains, it's not going to be an issue of you having to, find somewhere to park your car, or your house is getting flooded. We have paved concrete roads. We have good internal and external drainage for times like these, and we have water treatment facility. We also have recreational, areas where your kids can play as well. We have a playground for kids, and we are going to have also a basketball field. Some of the facilities that you can enjoy within the estates and around the estate is sustainability and solar systems. You have access to financial services, your local transportation, so it's easy to move around. We have a sports center. There's also is in close proximity to the Pan-African University. We have a laundromat as well in the Golf and Country Estate. You have access to healthcare, so you don't have to worry about, going so far and thinking that, Lakaway, I have to drive all the way. No, we have access to healthcare. There's access to office spaces in case you work from home. And then we have ICT infrastructure, and you have access to your local shopping centers where you can buy your groceries and, you just general upkeep of your home or of yourself. So going into Duo by Mixer Africa, which is our rent-to-own scheme, like I said, the Duo program is a 3-year rent-to-own scheme for a 2-bedroom unit. Currently, we have, as of now, we have 2-bedroom units available for sale and are fully finished at Marula Park under the rent-to-own scheme. However, we're in the process of increasing the our I'm so sorry for lack of better terms. We're in the process of moving from only 2 bedroom to 1, 2, and 3 bedroom. So you'll be able to buy a 1 bedroom unit as well as a 3 bedroom unit under our rent to own scheme. And coming into the scheme is very, very easy. It is very straightforward and hassle free, right? Coming into the scheme, you indicate interest. Like after this webinar, I'm sure a lot of you will be interested in what we're offering you today. You show your interest, and then you go ahead to indicate your interest by filling a form. After that is done, you give us your documentation, because we have a documentation checklist to ensure that all your documentation is in place. We have documentation checklist for the fully employed, and we have a documentation checklist for self-employed, just to know that you are gainfully employed, or you have a source of income, so that at the time where you're supposed to pay some certain kinds of money, rent or your equity or top-ups, it won't be an issue. So once your documentation is properly checked out, you go ahead and pay your equity contribution, which is not less than 5%. You can't pay anything less than 5% of the entry price, which is 47 million naira. So once you do that, within 18 months, we give you the keys to the property on a lease basis. So you are not yet the owner of the house. You are still a tenant until you become the owner, until you become the landlord. So it's up to the client to decide if they want to do for a year or 2 or 3, but the maximum amount of years is 3 years. Once we give you the keys to the house, then you pay your first year's rent. Then you pay your second year's rent, and then you pay your third year's rent. Once that is over, you pay something called an option sum. After you pay your option sum, then you become, the landlord of the house. So it goes from tenant to landlord. Then Mixstar then gives you all the necessary documentation that you need. Mixstar has a global C of O, so you don't have to worry about, you bought a house, you're not sure about the documentation. We have a global C of O, and some of the documents that you get is a contract of sale. You also get a deed of assignment and a Form 1C, as well as a survey plan. So once you pay full payment, the home becomes to you. Easy way to part ownership, and it is not even stressful at all. Very, very hassle free. So the property's entry price, like I said, is 47 million. The year one, where you pay year zero, you pay your equity contribution nothing less than 5%. Year 1 to 3, you pay a fixed rental figure of 1.5 million, approximately 1.6 million anyways. And then at the end of your tenure, you pay something called an option sum. So let me quickly touch on our different payment plans that we have and really break down the payment options that we have for dual. So we have up to 5 payment options, but we're going to keep it very simple, and so that it's easier to understand. So we have a payment option. This is payment option 1, where the client decides to pay 5% equity. Like I said, you can pay more than 5%. You can pay 10%, 15, 20, 25, up to 25%. But this is one payment option that we wanted to focus on. So coming into the scheme, you pay 2.3 million naira. That is the equity contribution, which is due as of 2024, or any year that you decide to invest in a rent to own scheme. After that, you pay a rental figure of 1.5 million naira. And that is the point where we hand over to you. So we've sold out on our first block. We're currently on our second block, and we have limited units available. So it would be good. My advice to you is that you get on board very quickly, so that you can starts enjoying the benefits of this rent-to-own scheme. Oh, did I forget to add that also, if you buy this rent-to-own scheme and you don't want to necessarily live in the facility, you're allowed to sublease the unit, meaning that you can already start making, some kind of income from the units when you sublease the unit to someone else. For example, if you're in the diaspora or you are even in Nigeria, but you don't live around there, you can sublease the apartment to someone so that even when it's time for you to pay the rent, it might not even come out of your pocket. And Mixer is only asking you for 1.5. If you are, fortunate enough, the going rates for apartments at Marula Park around Lakwe right now is around 1.7. So you can definitely find someone that will pay that or more than that. So you pay your first year's rent 1.5, your second year the same thing, and the third year the same thing. Then at the end of the third year, which is proposed to be March 31st, 2027, that is if you key into the scheme right now, you pay, after you pay your last year's rent, in March 2028, you pay something called an option sum, and that is the sum that will determine if you actually convert to full home ownership or you just leave it as being a tenant. Now I'm sure a lot of you are wondering why the option sum is a bit different from the entry price. That is because there's a 15% interest rate. There's a 15% interest rate that has been applied from when your rent starts to count in the first year. Why is that? Because of the the constant increase in construction materials. There's also the time value of money. I'm sure a lot of you agree with me that buying a property in 2025 and buying a property in 2028, surely the prices cannot be the same. So there's a 15% interest rate that has been included in the pricing as well. So going to the second payment option, which is for 2 years, is basically the same thing as the 3 years plan. The only difference is that this one you get to close out in year 2 instead of year 3. So you pay your equity, you pay your first year's rent, you pay your second year's rent, and by the end of the second year, going into the third year, you pay your option sum and convert to full home ownership. And then the third payment option is the same thing as well. It's just that you pay rent for just 1 year and then you decide to become a homeowner in just 1 year, right? Which is still fair if you think about it, because like I said, you're already making use of the facility and enjoying the facility of Marula Park. Thank you very much, everyone. I will be hoping to answer any questions that you have about our rent-to-own scheme in the chat box after this presentation. So I'm handing over to my colleague Glory now to speak on navigating mortgage in Nigeria. Thank you, everyone.
Thank you very much, Shion, for that wonderful session. Good evening, everyone, and welcome back. So I'm just going to give a summary of what Shion talked about. Before then, there's a Q&A session on the screen. Just look for it and drop your questions. There's someone that would attend to it. You could just use your cursor, look for it, Q&A section. It's not exactly a chat box, like I mentioned. It's a Q&A section. Please look for it and drop your questions. So the questions will be answered as the session is going on. All right, so thank you again, Shion. I'm going to continue from here. My name is Glory Ojerinde, and I'm the Business Development Associate for Duo by Mixta Africa. And I'm going to speak about navigating mortgage in Nigeria. As Shion has said earlier, there are different pathways, and thankfully, home ownership is no longer as difficult or as cumbersome as people would think. So I'm going to talk about mortgage. So the one Shion just described, we'll call it Duo Classic. That's the conventional pricing. So I'm still going to talk about other pricing too, but let me talk about navigating mortgage. So Duo is in partnership with Access Bank, and one of the major concerns we have that people tell us is, okay, so if I pay my equity contribution and I pay my first year rent and I want to convert to ownership, how do I pay my option sum? If you look at the previous the previous slide, you see that the option sum is a bit bulky. And one of the major questions we are faced with is, how do we pay this option sum? That is why we are here. Access Bank, in partnership with Mixta Africa, is offering mortgage at 15% interest per annum. And okay, so the tenure is up to 20 years, and you have to be less than, okay, not more than 60 years. And you have to be in active employment. So now, navigating mortgage, let me get into that. Before you navigate mortgage in Nigeria, you need to assess your finances. You know your financial capability, you know how much you earn monthly, you know if you have a side business, you know how much you can let go every month to pay. Then you choose the right lender, and we have gone ahead, we've partnered with Access Bank to make it easy. Then, you know, for every financing, whether home, car financing, you need to understand the terms. The bank has their terms, so you need to understand them thoroughly, look through the terms. You can work with a lawyer to understand the terms. Then you prepare documentation. There are documentations that are required. Just make sure they are provided. The next is to apply and get pre-approved. That is the next one. Then you get the loan. The way we list it is not as straightforward as this, and is also straightforward like this. It all requires processes. So if you check the Q&A box, chat box, you'll see this link. If you're interested in the Access Bank mortgage, you could click on the link and fill the form. We'll get back to you. I don't know if you can't copy it from the screen, because I don't think that's possible, but we've dropped it in the Q&A box. All right, so let's get into it. Now, for this mortgage, the locations that are approved are Lagos, Abuja, and Port Harcourt. And Mixta Africa, our product currently is in Lakwe, in the Gulf Estate, Lakwe Lakes Gulf and Country Estate. That's where our land bank is. And this product we are talking about, the Marula Park, is inside the Gulf Estate. So currently we have project in Abuja, but that's not what we're talking about. Also, in the future, we're looking at having project coming up in Port Harcourt. So these are the locations that are approved for the mortgage. Then what is needed is 20% equity contribution. If you remember very well, and you've been following this webinar, what Sean described in the earlier slides is the Duo Classic. What you need to enter that plan is 5% equity contribution. That's if you are doing the classic plan. But if you are going with mortgage, you're going to build your equity up to 20%. So how do we do this? We're going to get into that. Then eligibility, we are talking about salary earners and business owners. You have to have a 9 to 5, 8 to 5 or 9 to 5. You have to be a business owner. Then the age limit is not less than 21, not older than 60 years. Then debt service ratio, that's 3% of your monthly salary. For example, you are earning 1 million. The highest amount you can contribute monthly is 330,000, if I'm right. So these are the requirements for Access Bank mortgage. Then let me talk about the plans. So when I was talking about this webinar, one of the things I wrote is that we sat and came up with this plan. So if you want to access this mortgage, you need to build your equity to be 20%. So Duo is presenting you with 3 variants of pricing. Now, just keep in mind that you need 20% equity to be paid outrightly or in installment. Now we sat down together, went back to the drawing board with the team and say, okay, how do we make this easy for people so that, you know, the 20% is quite bulky. And for some of us that don't earn maybe 10 million a month or 5 million or 7 million a month, we can work out something. In fact, we've worked out something for you. So this Duo Active, your initial equity contribution is 5%. You pay your 5%. Then the other 10% needed will be spread over 6 months. So the remaining 5%, we're going to add something called equity top-up. So let me explain. For example, you're interested in this mortgage. You've paid your equity. Mr. A pays his equity of 5%. Then the balance, after breaking it down, you start paying monthly, every month. Then before before the first year rent, there's something called equity top up. That will be the balance for the 20%. Then you now pay your annual rent. With that, you have built your equity up to 20%, and you can now access this mortgage you're talking about. Then we'll talk about the DOE Extra. The difference between this one is that you have 9 months to pay your 15% equity contribution after your initial 5%. Then we have the DOE Bounty. This one, you pay your 20% over 12 months. So the next slide, I'm going to show like a breakdown in figures. So if you look at, let me confirm if you can see my screen. I just need one person to just confirm that you can hear me clearly and you can see my screen, because we want to take a lot of questions as much as possible to be sure that people understand what we are talking about. Can you hear me? Can you see my screen? Please, I just need feedback.
Yes, we can hear you and see your screen.
Thank you very much. So for the DOE Active, from the screen, you see that the initial equity contribution is 2,310,000. Then month 1, by the time we broke this down, it came to 1 million monthly. So if you look at the screen, from month 1 to month 6, the 6th month is 1,090,000. Then to match up with the equity, because it's not yet 20%, you're going to do an equity match up of 2 million to build up your 20% equity. That's under DOE Active. Then what you'll be needing as mortgage to make up for your option sum is 41.6 million. That's the amount you'll be needing as for the loan home finance. Then looking at the DOE Extra, you'll notice that you have 9 months. So by the time we broke it down, after paying your initial equity contribution, you start paying 680,000 monthly for the next 9 months. Then before your first year rent starts, you pay the equity match up. That's 2 million. So with that, you've built your equity up to 20%. Now you notice that you're not paying this 20% once. We did a standard payment plan where you can pay it up to 9 months. Then look at the DOE Bounty. This one is a bit much easier. After your 5% equity contribution, you start paying for the next 12 months. But you notice that from month 1 to month 11 is 510. Then the 12th month is 480,000, just a bit less. Then you pay your match up 2 million before you pay your rent. So if you have questions, please, like I said, look for the Q&A section and drop your questions. So this is what the mortgage, I don't know if I should go over this again or is well understood. Okay, so if there are questions, we'll go over it again. Let me move to the next slide. Now look at this investment proposition. Why should you buy into Marola Park? Why should you buy our property? If you look at this graph, you see that the annual rate, and this is as at 2021, between 2021 and 2024, a lot has happened. A lot has happened. Like construction costs has gone, if not more than 100%. So Odekoyi, according to Northcote, that's the data is from Northcote and Mixter internal data. Odekoyi has appreciated by 26%. That's from 2017 to 2021, 26%. Then let's look at Lekki Phase 1. If you're familiar with Lekki Phase 1, you'll notice that Lekki Phase 1 is becoming more commercial than residential. Unlike years ago where Lekki Phase 1 is known for the big boys where they live, but now Lekki Phase 1, especially the Admiralty Way, and maybe Fola Oshibo and the major hotspot there is more commercial. Look at the rate of appreciation, 130%. That's very high. Look at Victoria Island, 28%, Shongotedo, 62%, Iramade Sonya, 47%, Magodo, 67%, Ikeja, 38%. Then look at LNT. LNT is Lagos New Town. That is where our properties are located in Lakwe. Look at the figure, 189%. So let me give you an example. There's a particular product we sold years back, and some of our staff even bought into it. It was selling for about 15 million, I think, a bungalow. Now it's close to about 80 million naira. So if you were an investor years ago and you bought that particular product for 15 million and you want to sell it now, you are selling it at 80 million. I don't think there's any other investment that can give you that kind of returns. I don't think there's any other. Is it bonds? Is it shares? Is it crypto? I don't know. I don't know. But this is what I understand. I don't really understand crypto like that. I'm just saying that with this graph, with this data, the LNT has very high prospect, and that is why we are telling you to invest in it. In the next few years, the appreciation will blow your mind. So because of our time, let's go to Q&A. Please drop your questions in the chat box. Do we have questions already?
Yes, we do, Glory.
Okay. Okay. Are you answering them? Okay.
Good evening, everyone. You could drop your questions just at the bottom right. That's the activity section. Once again, my name is Bolindi Shodipo. I'm with the Duo team. I will all be answering your questions. So there's a Q&A session just at the activity box at the bottom right. The icon that has a triangle on top, just next to the chat. If it is difficult to navigate, you could always drop the questions on the chat. The chat is now open for everyone to ask. So I'll be taking the first one while my teammates look at the questions available. My teammate, Glory, can you see the questions now?
I'm still looking. I don't know. I can't see them.
Okay. So I'll just go ahead to answer some questions. So the first one I have here is from Ifeanyi Okafor. Can I pay the 47 million outrightly now and take over the property immediately? You could pay the 47 million, pardon me, I wonder why I'm reducing the value. The 47 million, but you'd still have to pay the 1 year rent because it's a rent to own scheme. However, Mixta Africa has these same products, that's the Marula estate product, and has a standard payment plan where you can pay outrightly and even maybe enjoy a discount based on your outright payments, and you get the property immediately. I hope that's fine, Mr. Ifeanyi. The next question I have here is saying, is it possible to visit the location first to see the area before investing? Yes, it is possible. We actually encourage all our potential clients to come and see our site, our land bank. We always have visitations right from Monday all through to Sunday. There's someone always on the premises to give you a proper tour, to show you not just the product that we've discussed about, that's the Marula estate, but other estates that the company has actually delivered from years past till date. The next question is saying, after I pay my initial 5% and followed by the 3-year rent, what guarantee do I have that Mixta won't come and tell me the property value is no longer 47 due to the current realities, and then ask me to pay 90 million or offer to pay me back my contribution? Thank you for your question, Mr. Adekunle. I can imagine this question, especially with the current realities, just as you put in exclamation. But what we do in Mixta Africa and also in Duo by Mixta, once we enter into an agreement with you and we close it out on an offer that you have signed and we have signed, we do not change your price as far as you do not default in your payments. However, in our offer letter, there are always default clauses and there are always cancellation clauses. While we would be in that agreement with you till the end, we have people that actually keyed into the Duo by Mixta at 31.9 million when we initially started, and the 5%, and made a 5% contribution and keyed into the products. Those are the first cycle that we have that we fully sold out. We haven't changed their price till that time to date. So same will apply with anyone that comes in now, e.g. you, Mr. Adekunle. So if you key into the products now and we're already locking a price, we do not intend to change that price, since you would also not default in your payments plan. Yes. So I think I have another question. He said, is the mortgage taken for the option sum only? For how long will the yearly rent be paid for? So the maximum yearly rent is 3 years. But for the mortgage, if you key into the mortgage by putting in your details on the mortgage interest form now, we would already start processing the mortgage immediately, and we expect that before the end of your first rental period, the mortgage for yourself would be out, and it will be on that option sum, yes, for the outright balance. So you will pay the equity contribution of 20%, then the option sum would be paid by the mortgage. Osari mentioned, I'm interested in either land or a 4-bedroom apartment. Yes, we have land, and we also have a 4-bedroom apartment in Mixta Africa. Some of our products, you could check out our site. That's Mixta Africa, www.mixtaafrica.com. We have some of our current land that is on sale, and we also your details will be gotten. Some of our sales reps that are also online would reach out to you with your interest, or better still, you could send us an email on duo@mixtaafrica.com, and we would forward your interest to the right personnel to handle. Mr. Adekunle says, this is my experience with Mixta. Okay, I can imagine. Please reach out to us personally on Duo by Mixta, and we are certain that we have different clients that have actually had these same discussions, and we have proven ourselves again that things have not changed as far as you did not default in your payment plan. Just to confirm, Glory and Shewa, are you able to see the question and answer now?
Yes, I can see it now.
Okay, perfect. And please also take note, just in case there are questions on the chat box. There's another question from AW Metrics. Thank you. If I pay my initial payments and pay my first year rent, must I move in compulsorily? No, you don't have to move in compulsorily. You could come in as an investor. You could say to yourself that I don't want to stay in that apartment, just as my colleague Larry mentioned, and Shewa as well. You could decide that you want to rent it out to another person to stay in, so you earn that rental income and you continue the payment. At the end of the day, the contract that Mixta has is with you directly, and you would eventually become the property owner at the end of your rental period. Okay, so I think that's the end of the questions that I have. Just to quickly check if there are other questions on the chat box.
Okay, so there's one here. I'm interested in either land or 4-bedroom apartment.
Yes.
Sir, kindly reach out to us. We'll get back to you on that.
Okay.
Okay, then Olutayo Ige, is the mortgage taken for the option sum only? I don't know if you've answered this.
Oh, yes, I have. Yes, I have.
Okay. How can I benefit from Duo? Anonymous.
I can answer that. You could take it, Glory.
Okay, Mr. Anonymous, Mr. or Miss or Mrs. Anonymous. So if you've started with us from the beginning, there are a lot of benefits from Duo. Duo is it has a lot of benefits. I don't even know where to start from. If you don't have bulk money to buy property, Duo is an option you can go for. All you need to do is to pay a minimum deposit of 5% of the property value, then start paying rent for a maximum period of 3 years, pay your option sum, and become a homeowner. So you go from being a tenant to a landlord in a maximum 3-year period. Also, you can also get you could get mortgage, Access Bank, or you have options to look for home finance, but we are in partnership with Access Bank. I will help you with any to facilitate the process. So there are a lot of benefits from Duo that we can talk to you extensively beyond this call. You can please reach out to us via our email. You can send an email to us. I think we'll drop that in the chat box, so we'll take it from there because of our time. Thank you. Are there any other questions? Please, do you have relationship with NHF? Boinde, please, could you please take that question? Hello, Boinde. Okay, so are the lands located in Lagos? We're in Lagos. We are located at Lakwe, Lekki Ekpe Expressway, Lakwe, Lagos. That's where our land bank is. That's where Marula Park is situated, Mr. Osaremian. Okay. What's the relationship? Draw. Okay, so Mixta Africa, it's the, should I call it the parent body? Draw by Mixta is not really a subsidiary. It's, I don't know how to answer this. We came
Okay.
up with this for people like you. But they didn't want to take that.
Okay, that'll be fine. Sorry about the initial time. I couldn't unmute for some reason, but I'm back on. So it says, do we have
What's the relationship between Duo and Mixta? Shino Azan. Okay, I guess she's having network issues. Let me take this. Do you have a relationship with NHS? Okay, so if you want to buy property, you are not limited to a particular mortgage institution. You can, there are so many financial organizations willing to give you home finance, so many banks. So we do not have a partnership per se with NHF, but you can secure NHF funding. You can go ahead with the process, get the loan, and use it to buy Duo. But we have partnership with Access Bank. That's what I can say for now. Thank you. Abiodun Adewale. Are the lands located in Lagos? Okay, I think I've answered this. I've answered this. Okay. All right. I think there's a question now. Let me check the chat. What is the basic requirement for mortgage loans? Sir, could you please fill the mortgage interest form? If you scroll up the chat, you'll see the mortgage interest form. We will get in touch with you with all the required documents. That's Mr. Nobif UK. Yes. Is there any support provided by Mixta Africa when it comes to renting out the property? Well, there are people that come. Okay, so the Marula Park is close to Beachwood Park where people are fully living in, and there are rental requests here and there. So if there are open rental requests, we can actually help out. But saying that Mixed Africa will come help you rent it out, I'm not sure of that. I'm not sure of that. We'll do our best to help you rent it out, but I think that's the best we can do. Is there any question that I'm missing? Please,
Glory, can I touch back on the one you asked, the first one? What is
yes,
the relationship?
yes.
Yes.
Please go ahead.
Thank you. Thank you. So Mixed Africa is a group of companies that is operational in 5 countries, just as mentioned by my colleague earlier during the introduction. As part of its subsidiaries, especially under the Affordable Housing Scheme, we have the Duo by Mixta. Duo by Mixta is another alternative initiative that is provided by Mixta Africa to reach the middle income earners, so that they would be able to have that pathway, that easy pathway towards becoming homeowners. So yes, that's the relationship with Mixta. Another question was stated there around NHF. Please, do you have relationship with NHF? We do not have relationship directly with NHF, but we have certain PMIs, that's primary mortgage institutions, that disburse NHF. So if you want to access your NHF contribution, we have the certain criteria, and we have the links that we could connect you directly to these PMIs. But the discussion around your contribution, disbursement, or your application for a mortgage would be directly between you and the PMI. Mixta would only be an intermediary by delivering, as in connecting both the PMI and yourself, but would not be assisting in the process. Yes. Thank you for that question.
Okay. I think there are new questions. I'm trying to.
Okay. I could see one here from Osarime. It says, send me the slides with the breakdown. Yes, Mr. Osarime. Well, we will do that. Please, if you could go ahead to actually fill the interest form on the chat box, so that we would actually have your details. That's your email address, most especially, so we could send the slide to you. But if you've already registered, in fact, if you registered ahead and didn't just join by clicking the link that was shared, we would actually send the slides to you eventually. Thank you. Okay, thank you, Mr.
Thank you.
Biona.
Okay, there's another question here. Does Mixter not have a property management partner company?
When you say property management partner company, I believe what you mean is, do we have property managers that assist with maybe some of our homes? But I would say for now, Mixter actually does constructions and developments basically. So we do not have we have our individual facility managers across all our projects, but we do not have any property management partner company now. But if you have something in mind, please reach out to us on duo@mixterafrica.com and we would understand the proposal that you have. Is it possible to send a slide to this? Yes, we will take down your information and we would reach out to you, Mr. Additional.
Okay, do you have any more questions? Is there any question I'm missing? I'm trying to look for, okay. All right, okay. Okay, I've seen your email, Additional Hassan. We'll reach out to you, sir. Thank you very much. Let me see, are there more questions I'm not seeing? Okay, I think we are done with questions. Okay, Mr. Noob Beef UK will send you an email. Thank you. All right. So thank you very much for attending this evening's webinar. And please send us an email, duo@mixterafrica.com. If you have any inquiries, if you need us to answer any of your questions, we'll be happy to answer them. Then also, don't forget that this the pricing we just told you is very limited. It can be reviewed anytime from now. Please, as soon as you finish this webinar, send us an email, key into it, because we have very limited. So you will not say, oh, this is not the price that you told us during the webinar. We have very limited units available for this pricing. It will be changed very soon. As soon as we are done with the outstanding ones, we're going to change the pricing. Any other thing, Boyinde, do you have one or two things to say before we finish?
Thank you very much, Glory, and thank you everyone for joining. Just as a short recap of all that have been mentioned, Duo by Mixter is a rent-to-own scheme that gives you that ease towards ownership. On our classic platform, we have a maximum of 3 years rental, where you come in with a minimum of 5%. You stay for a maximum of 3 years, and you pay your option sum. Currently, we are offering at a limited offer 3 variants where you could enjoy to spread your equity, to access a mortgage of that on that option sum, and to spread your equity within 6 months, 9 months, and 12 months. That's what we call Duo Active, Duo Extra, and Duo Bounty. So at the end of the day, what we're trying to do is to reach out to income earners, employed and self-employed, to have that easiness towards actually having their homes. We have different product offering at this point: 1 bedroom, 2 bedroom, and 3 bedroom of the Marula Park apartment estates. So if you are interested in Duo, which helps you to actually own the home quickly, and not to actually procrastinate or use the money for something else, please fill out the form, the interest form as posted on the link. If you're interested in the mortgage as well, please fill out the form as posted on the chat box, pardon me. And if you have further information, kindly reach out, or further need for any information, kindly reach out to us by duo@mixterafrica.com. Thank you.
Thank you, everyone. It was nice having you all on this call. And I'll keep reiterating this. Don't snooze. If you snooze, you lose, like they say. Pardon me for using that phrase. We have very limited units for sale. So you won't say, oh, this is not the amount you told me. This is not the amount you presented. Please, somebody is raising his hand. We have just 4 minutes left. Can you please type your question on the chat box? We won't be able to unmute you to talk, sorry. Please drop your message or send us an email. We'll take it from there. Okay. I think someone wanted to say something, or am I missing something? Okay, Mr. Mike Demola, thank you. A tour will be helpful. We'll be happy to take you around. Please send us an email and we'll respond to you. What's 3 rent for 1 bedroom and 2 bedroom? Okay, what's the rent for 1 bedroom and 2 bedroom? You know, the rates are changing from time to time. We can't really say for now, but I think it should be above 1 million due to the current economic reality we are in. So 1 2-bed will be above 1 million. I can't give you a specific price because they keep changing. Okay, provide an email. Yes, I would provide an email. Please scroll up the chat. We dropped an email earlier. Let me see if I can send it again. Joe. Okay. Please send us an email. We'll be expecting to hear from you. Okay. All right. Thank you very much. It's a wrap this evening. Have a lovely evening. We'll be expecting to hear from you. Thank you very much. See you next time. Bye.